Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 4th of May. Now this week we've got quite a bit of fundamental news coming out later in the week. Important announcements from the non-farm payroll numbers on Friday. They're always a big market mover, and of course this week, this particular month, not expected to be particularly pretty numbers either. We've also got the Great British Pound interest rate decisions and Bank of England Monetary Policy Committee meeting on Thursday. And on top of that, many markets are at some key technical potential decision point areas as well. So let's take a look at a few markets that we're keeping an eye on at the beginning of this week and some of the opportunities that we're looking at. So if we come across and take a look at the US equity markets, first of all, the market of choice that we're looking at the moment is the S&P 500. And we'll see here that the market has retraced already up to 61.8% of the initial COVID-19 crash. You can see this here on the weekly chart. And this level coincided, or the 61.8% level coincided with a technical structure level here, as you can see, and that's just around 2,900. The market's rejected off there last week and really couldn't hold any of its gains last week and closed at the lows. Now this week the market opened with a gap lower underneath, breaking the low of last week's candle. Technically, we'll see that the market's retraced back up to virtually sort of close the gap, but also test this other technical level here that you can see on the chart, which is around 28.20, and the market's just kind of rejecting off here at the moment. So any more sort of significant move to the short side is starting to look rather bearish, particularly if we come and take a look at this at the 4-hour time frame. So you can see the 28.10, 28.12 level here on the 4-hour time frame, a little bit tighter. You can see how the market has now gapped underneath it, retraced back up to the level to sort of test the level, and now starting to look sort of particularly weak. We've got some decisive sort of trading windows underneath the market here, and the Dow and the NASDAQ are also looking particularly similar here. So we're liking US equity markets to the short side. Obviously, one of the things that's really going to get this going is the sort of fundamentals or news-related, bearish news-related items, and we've got plenty of those, or potential for those later on in this week. So at this moment in time, we're keeping a close eye on for opportunities short on the US equity markets. If we come across to the commodity markets now and take a look at silver, and if we take a look at silver here on the weekly chart, we can see that the market has retraced sort of a good portion here of its COVID-19 initial crash. It's then for the past few weeks been looking particularly sort of bearish, so almost sort of ahead of the game here, or potentially ahead of the game than the equity markets. There's a level through here around 1477 where you can see the market sort of found support at a number of times before. So if price gets below that, it really does sort of open up the sort of window for sort of further weaker prices. Now, if we come down to the 4-hour time frame here, you can see that we've got the level here at $15. And you'll see that just underneath $15, well, there's this level here has been tested multiple times. Underneath this opens up a window down to the sort of just underneath that 14,500 area, and then below that there are sort of further trading windows to the short side. Again, if we take a look at this on the daily time frame, you can see the significance of the $15 level and the 1477 as well. So again, looking at short opportunities here, if the market sort of breaks to the short side here on this on silver, ideally there could be some opportunities underneath 15 down to the 1477, but we'd rather see some sort of opportunity underneath that sort of 1477 for a longer term swing play. Now, if we come to the currency markets, one that we're keeping an eye on here is Kiwi yen, and there's a number of currency markets again which are all at similar decision turning points. This particular one here, again, similar, that the market has already retraced a good level of distance off its COVID-19 crash. It's then been stuck within a range between 66 and 64. And you can see that just underneath this 64 level is where the market sort of tested a few times in the past. So come down to the 4-hour time frame again, the daily time frame, we can see the range that the market's been contained within, the 66 to 64 level. Our interest here is if the market gets underneath 64, we could be looking for a significant move to the short side. We've got, if we come to the 4-hour time frame here, and you can see the 64 level here. Underneath that, we've got 63.30, where there's a bit of previous support. Underneath that, well, we've probably got to move down to 62, and then probably down to the sort of 60, close to that $60 level. So there's some significant potential trading windows to the short side on this market. And again, of course, you know, our bias could change here if price broke above that $66 level to the long side. But at the moment, our focus is more for opportunities short if we get underneath that 64 price point. So there's a few markets there that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.